There are roughly 28 million Americans running a business from home right now, and most of them are leaving money on the table because they've heard the home office deduction is audit gate. It's not, and if you're one of those people, whether you own your home, rent an apartment, or work out of converted garage, this video is going to show you exactly what you can claim, how to do it right, and the one mistake that trips up almost everyone. Welcome to the Really Useful Information Company. Here's the thing about the home office deduction. It's one of the most misunderstood tax breaks available to small business owners. Some people think you need to own your own home to claim it. Not true. Some think you need a separate room with a door. Also not always true. And some think claiming it is basically asking for an audit. And that one's a myth that just won't die. Here's what we're covering today. First, who actually qualifies, and this is broader than you think. Then the two methods for calculating your deduction and how to pick the right one. After that, the specific expenses you can claim, including some that might surprise people. And finally, the record-keeping system that makes the whole thing audit-proof. By the end of this video, you'll know exactly whether you qualify and how much you could be saving. We also have a free downloadable guide, a little worksheet that you can follow along or save for afterwards and start crunching some of those numbers. Chapter 1, who qualifies? Let's clear the biggest misconception first. You do not need to own your home to claim the home office deduction. If you rent, you qualify. If you live in an apartment, you qualify. If you're in a condo, a townhouse, even a houseboat, invite me, as long as it's where you live and where you work, you're in the game. The IRS has two requirements, and they're simpler than people make them. First, regular and exclusive use. The space you're claiming must be used regularly for business and exclusively for business. That word exclusively is doing the heavy lifting. Your kitchen table where you sometimes answer emails, it doesn't count. But a corner of your bedroom with a dedicated desk that you only use for work, that can. Second, principal place of business. Your home office needs to be either your main place of business, the place where you meet clients or customers in the normal course of business, or a separate structure on your property used exclusively for business, like a detached garage or a backyard studio. Let's give an example. Let's say you're self-employed, you rent a house, and you've set up a dedicated office in one of the rooms. That house is your registered business address. You meet clients there regularly, collaborators come by to work with you. You don't own the property, but that doesn't matter. The deduction is about how you use the space, not whether you hold the deed. You qualify. An important note, this deduction is for self-employed individuals, sole proprietors, and independent contractors. If you are a W-2 employee working from home, the home office deduction was eliminated for you under the 2017 Tax Cuts and Jobs Act, and that hasn't changed. If you're self-employed, keep watching. This is for you. Chapter 2, Simplified versus Actual. The IRS gives us two ways to calculate your home office deduction. Each has its own place, and the right choice depends on your situation. The simplified method is exactly what it sounds like. You multiply your office's square footage by $5 per square foot up to a maximum of 300 square feet. That gives you a maximum deduction of $1,500, no tracking individual expenses, no calculating percentages, no complex math. You measure your office, you multiply it by 5, and you're done. The actual expense method takes more work, but it can yield a significantly larger deduction. Here's how it works. You calculate the percentage of your home that's used for business, and then you apply that percentage to your actual home expenses. Let's walk through a real example. Say your home office is 200 square feet and your total home is 1,600 square feet. That's 12.5% business use. Now you apply that 12.5% to your qualifying expenses: rent or mortgage interest, utilities, renters or homeowners insurance, repairs and maintenance, even internet and phone if you use them for business. If those expenses total $24,000 a year, your deduction is $3,000. That's more than what you would get from the simplified method. So how do you choose? Bigger number, presumably. A good rule of thumb, though, is if your office is small and your home expenses are modest, this simplified method saves you paperwork for roughly the same benefit. If your office is larger than about 150 square feet or your housing costs are high, which, let's be honest, describes most of the country right now, the actual expense method almost always wins. Run both calculations, pick the bigger number. You are allowed to switch methods from year to year. Chapter 3, Qualifying Expenses. If you're using the actual expense method, here's what you can include. The obvious ones: rent or mortgage interest, property taxes if you own, utilities, electricity, gas, water, homeowners or renters insurance, and general repairs or maintenance that benefit the whole home. Now, here's where renters often leave money on the table. Your monthly rent is a qualifying expense. If you pay $2,000 a month in rent and your office is 12.5% of your home, that's $250 a month, $3,000 a year just from rent. And utilities, internet, and insurance, it all climbs fast. Renters, if you're not claiming this, you are kind of giving your money away. Internet and phone deserve special attention. If you use your internet connection for both personal and business use, which is almost everyone, you can deduct the business percentage. The simplest approach, use your home office percentage. If your office is 12.5% of your home, deduct 12.5% of your internet bill. Some people calculate a higher business use percentage if they can document it, but the home office percentage is the safe, simple method. Repairs and improvements to the office itself, not the whole house, just the office space, are 100% deductible. Painted the office walls, full deduction. Installed better lighting in just that room, full deduction. Put in built-in shelving for your business files, full deduction. These are direct expenses and they don't get reduced by the percentage calculation. One thing that catches people, if you made improvements to your home office space, even in a rental, those improvements may qualify. Added a dedicated electrical circuit for your equipment, installed soundproofing for video calls, these can be deductible. Keep the receipts and document that they were for business use. Chapter 4, myths that cost you money. Let's kill some myths because these are the ones that stop people from claiming a perfectly legitimate deduction. Myth number 1, the home office deduction triggers audits. This was arguably true decades ago, but the IRS has explicitly stated that the home office deduction, when claimed correctly, is not a red flag. What triggers audits is claiming the deduction incorrectly, like deducting your entire home when you use one room, or claiming a space that's clearly not exclusively for business. Claim it correctly, and it's just another line on your return. Myth number 2, you need a separate room with a door. Nope. The IRS requires a separately identifiable space used regularly and exclusively for business. That can be a section of a room. If you have a dedicated desk area in your living room that you only use for work, that can qualify. The key is exclusive. If the kids do homework there too, it doesn't count, but a permanent defined workspace that's only used for business, that works. Myth number 3, renters can't claim it. We've already covered this, but it bears repeating because it's the most expensive myth on this list. Renters absolutely qualify, and because rent is often a large monthly expense, if not your primary monthly expense, the deduction can be substantial. Myth number 4, it's not worth the hassle. The simplified method takes about 5 minutes. Measure your office, multiply it by 5, and write down the number. Even if you go with the actual expense method, we're talking about a few hours of organization per year for potentially thousands of dollars in tax savings. At $3,000 in savings, that's the highest hourly rate you may ever earn. Chapter 5, record keeping. Here's the system that makes this audit-proof. It's simple and it takes about 10 minutes to set up. Step 1, measure your office space and take a photo. Document the square footage, take a picture that shows it's a dedicated workspace, and save both. Do this once, and you really only need to update it if your space changes. Step 2, keep a folder, digital or physical or both, for housing-related expenses, rent receipts or lease agreement, utility bills, insurance statements, internet bills. Most of these you already have in your email or online accounts. Step 3, track any direct office expenses separately. Repairs, improvements, furniture, equipment that stays in the office. Keep receipts and note that they are for the home office. Step 4, at the end of the year, run both calculations, simplified and actual, and pick the better number. That's it. The whole system fits in one folder and takes less time than most people spend worrying about whether they should claim the deduction at all. If you meet clients at your home office, keep a simple log. Date, who visited, business purpose. This supports your claim that the space is used to meet clients or do business in the normal course of your business, which is one of the qualifying criteria. It doesn't need to be complicated. A note in your calendar is enough. P.S. This is yet another reason why it's so important and so encouraged to have a separate business bank account or a separate business credit card. Being able to purchase these things on a dedicated card makes finding them when you need them so much simpler than your entire year of your life's receipts. Let's bring it all together. If you're self-employed and you work from home, whether you own or you rent, you likely qualify for the home office deduction. You have two methods: simplified at $5 per square foot up to $1,500, or actual expenses, which can be significantly more. Renters, you are leaving money on the table if you're not claiming this. The audit myth is just that. It's a myth, and the record keeping takes about 10 minutes to set up. Here's what to do right now. Go measure your home office space. Look up your total home square footage. Run the simplified calculation. That takes 30 seconds. Then pull together your rent or mortgage, utilities, insurance numbers, and run the actual expense calculation. Compare them. Pick the bigger number and talk to your accountant or tax professional about claiming it this year or setting up a system to do it next year. If you're just starting your business and you aren't sure what structure makes the most sense for your tax situation, we've got a free tool that walks you through the decision. The link is in the description. We also have a free worksheet that covers the home office deduction, where it has built-in calculations, and you can start crunching some of those numbers right now. Link is in the description for that. It's free. We are the Really Useful Information Company. We run howtostartanllc.com, and we are wishing you luck with your small business. See you next time.